Good afternoon and welcome to this webinar on gender lens investing organized by African Business Magazine and Educate Global. It is our second webinar on this topic, and I wish to say a special thanks to our partners, Standard Bank and Launch with GS, for making this conversation happen today. Coming together to talk about this topic over the past 4 months has definitely sparked new collaborations within our investment community that we're excited to share with you today. My name is Sanjine Henton, and I'm the MD at Educate Global, an asset manager dedicated to the essential sectors in East Africa. For those of you that are new to the topic of gender lens investing, GLI, it is an approach that takes into consideration gender-based factors to advance gender equality and reduce bias in investment decision-making. The rationale for such strategy is obvious, but the flows of institutional capital at scale is still lacking today. And the momentum for GLI is definitely picking up, but the funding gap for women-owned businesses in Sub-Saharan Africa and women-led fund managers is currently estimated at $42 billion, and often in overlooked sectors and industries where women are very economically active. So today we brought in professionals from across government, development finance institution with a long history of investing in emerging markets, African and international banks, as well as pension funds to share their views on what GLI is well poised to bring more institutional capital into Africa for the recovery. There will also be a chance for the audience Q&A, so please post your question in the chat box. Now I'm going to hand over to Lindeka Leeds Dedze, who is Executive and Head of Institutional Clients at the Standard Bank Group, and Pedro Besugo from African Business Magazine, our moderator. Leeds will introduce today's topic of conversation and exciting plans to increase the flows of institutional capital to GLI investment strategies in Africa. So over to you, Leeds.
Thank you, Sandrine. Firstly, thank you to you in Africa Business, that's you, Pedro, for actually facilitating these webinars. It is important that we continue with the dialogue. The conversations have to continue. Gender lens investing is not something that happens during Women's Month in August in South Africa or International Women's Day, because I'm a woman every day. So I'm hoping that we move from talking to actually the act of doing to make sure that these things are happening. To introduce myself to those in the audience, firstly, I'd like to thank everyone who's taken their precious time to be with us today. We do not take that lightly. I am Lindeka Dedze, everyone calls me Leeds. I'm a proud South African by birth from the dusty villages of Eastern Cape. I say that with pride because I'm very lucky to be here. I made it, and there's plenty that are not with us today. And those of us who are sitting here are representing their voices. So these opportunities we don't take lightly. I'm also a proud citizen of the continent. I'm an African child. I think to position today's conversation, this is, as Sandrine said, this is not our first webinar. This is a second one that hopefully will lead to some actionable items that when we next come to you, we can share progress. In terms of what we're seeing, the COVID-19 crisis has put a very glaring spotlight on the challenges facing women in Africa, because that is added to the already heavy care burden that women are placed under, increasing the desire by the investment community to invest in sectors that support the care economy. The U.S. International Development Finance Corporation, that is commonly known as the DFC, announced on the 1st of July that they will be contributing $15 billion towards gender lens investing by 2025. We're hoping to help them facilitate that capital. This followed an announcement by the G7 of investing $15 billion by 2022. Looks like there's a lot of money that's been put towards gender lens investing. But I guess our challenge is, how do we make sure that it gets to the women that the intended beneficiaries in our lifetime? We need to make this happen. And I guess the business case and in the business case and impact case for gender smart strategies in the private sector are compelling. To name but a few, Goldman Sachs has invested $1 billion of its own balance sheet towards women-led businesses and fund managers. And in the June of this year, they announced an additional $500 million. In Africa, this is where we are. The UN Economic Commission for Africa, together with Standard Bank, we launched the African Women Impact Fund that is commonly known as AWIF, that is targeting to actually raise $1 billion over 10 years. The reason for this is to create a sustainable investment platform for women-led managers. While the momentum for GLI is picking up speed, the funding gap for women, as Sandrine said, in Sub-Saharan Africa is currently estimated at 42 billion. This is often overlooked sectors and industries where women are actively driving the economy. Today, what we're looking to unpack from this audience and from the panelists is why gender lens investing can bolster more institutional capital into Africa for the post-pandemic recovery. But more interestingly, we'd like to unpack what the key hurdles and risks in investing in women fund managers are. How do we overcome these challenges? And also, how do we drive or facilitate more foreign and African institutional capital towards gender smart asset classes? And what more can be done to improve the prospects of gender lens investing in Africa? And I guess we've had these conversations before, and we just bring it to your audience. I've just had the pleasure of talking to Jessica, Jen, and Marianne earlier in terms of the work that we want to do together to actually fast track and accelerate conversations into actions. And I guess that's another actionable item or progress that is being made from these conversations. We met at the first one that we had in June on the 29th of June. Today, we're already talking collaboration. So, and I'd like that, the reason I'm mentioning that is to bring our audience behind the scenes so that they are aware that we're not just talking, we are actually doing something. And I guess that's the reason these conversations are important. So thank you. I hope I haven't taken up too much time, Pedro. Over to you.
Thank you very much, Sandrine and Liz, for framing the discussion of today. Again, my name is Pedro, and I here from African Business Magazine. With us here today as well to join the discussion, we have Jessica Espinosa, Vice President of DEG in Germany, as well as the chair of the 2X Challenge. We have Mary Wangari, which is Executive Director at Equity Bank, and Dick Ingram, a Senior Advisor for Riskura. Starting with you, Jessica, we just heard some of the key numbers. We heard as well sort of the commitments of the 2X Challenge to raise an ambitious new $15 billion for GLI. What can you tell us about these commitments, and how confident are you that we'll be able to achieve those?
Thank you, Pedro. So to frame these 15 million, I think it's worth going back to 2018 when we first launched the 2X Challenge. And back then, this was the first time that our institutions, initially the development finance institutions of the G7 countries, but then also all of the other DFIs that are in our community, came together to make such a commitment. And everybody was at the time very convinced of the business and impact case of investing with a gender lens. But this was the first time that we seriously looked at our core business and embedded a gender lens from origination over due diligence, portfolio management, and value creation all the way to exits and preserving that change. And so naturally, everybody was quite nervous. And we gave ourselves a collective target of 3 billion by the end of 2020. And there was a lot of debate, is this too bullish? We're on stage at the Fed. Can we really deliver on that? And by building capacity together and really engaging in peer learning, mobilizing other private sector investors, we were able to really move the needle and also to transform our own business models and the way we allocate capital. And so by the end of 2020, we stood at 11.4 billion if we also count co-investments. And thereof around 7 billion just by the DFIs in the 2X Challenge. And so the new commitment of 15 billion collectively, and just for this year and next year, so until the end of 2022, kind of is now the new commitment. And it has become a little bit more challenging with COVID, the pandemic. Not necessarily in terms of the gender lens opportunities. On the contrary, we have actually seen more allocation, like a lot of the contributions to this target of 11 billion came in the COVID year. But overall, the allocations have gone slightly down, like the targets for many of the DFIs. So it is still quite ambitious in this recovery period. But we are confident that we can at least achieve the 15 billion, and we invite all of the other investors to join us and to co-invest with us.
That's fantastic, and I really hope that you indeed can achieve that. And in terms of going from capital raising into the allocation side of things, what sort of objectives are you planning to achieve? What are sort of the next steps up, hopefully after you achieve the targets of the 15 billion US dollars?
So what we have seen as kind of I think I would almost call it a blind spot of the industry. We've made a lot of progress looking at the traditional way of investing of DFIs mostly, so our own institutions. And we have really achieved a lot in looking at that kind of investment strategy, these criteria, and how to embed a gender lens. But when we actually look at the investment opportunities out there, we see a growing number of female fund managers that are emerging in the space that have very inspiring gender lens strategies, that are investing in exactly the types of businesses that are gender smart that we want to see get financed. But because they have more innovative approaches, and because they are new entering the space, they're not necessarily on the radar of these big institutions, and they do not necessarily meet the investment criteria that have been set by those institutions decades ago. So I think there's a lot of momentum, and there's really an opportunity for all of us to challenge our own investment criteria, to look at the opportunity in the market and take the perspective of the opportunities that are out there and how we can make it possible to invest in them, rather than just keeping these old criteria and then limiting the opportunities that we can actually invest in.
Yeah, fantastic. And I think that momentum is very important, and I would like to try and understand if that momentum in Africa and with Equity Bank is equally so. Mary, you as an executive director at Equity Bank, with your wealth of experience working in this space, what are your reactions? What is Equity Bank Group doing at the moment in terms of gender lens investing, and what is your strategy today and for the future?
Thank you, Pedro, and thank you, Jessica, for that highlight. I think what I believe is that the focus on gender requires different interventions from different perspectives, and that is because there are so many ways of looking at women and the opportunities available for them, the challenges that are facing them. So what as Equity we have done, and this has been going on for several years, of course, really fast-tracked by the COVID pandemic, which has really brought urgency to the interventions. We look at the interventions in 4 ways, and this is part of the financial inclusion agenda that Equity has been pushing over the years. And the first one is the save aspect. This is where we encourage savings and investments for the women, and of course all the low earners, including the youth, because we can't talk about women without talking about the youth, because there's a very direct correlation there. And the second one is the borrowing aspect. This is where the issue of small loans, especially for the micro enterprises, and of course the retail women come in. The third one is the insure part of it. Insurance, we believe, is very critical, not only for the preservation of the assets that these women are creating, but also for taking care of those eventualities that cannot be prevented or predicted. And of course, the last one is the move aspect. How do I move money to pay for things, pay my bills, pay for my purchases, business to business, person to person, etc., etc. So the idea is to really give platforms that make this these interventions work very well for our customers. And we've been able to attract, by the way, our customer base is probably about 52% women, going by the current data that we have. And what we have also seen is that even in terms of the borrow aspect, the women's track record in repaying loans is very good. Now, when it came to the challenges brought about by COVID, what have we done so far? We had to react very quickly. And the first one was to give moratoriums quickly, just to ease the pain the businesses were going through, and also from a personal perspective, what these women were going through. And we believe that those moratoriums helped a lot. And we gave them according to the sectors they were in, the businesses they were in, and the case-to-case approach in terms of what the individual business was going through. So they ranged from anything between 3 months to 36 months. Because I think also from our perspective, we thought that the pandemic, the impact may be felt for even up to 36 months, if not longer, by our own predictions based on the research that we did. And then we were very grateful because we got some partners who came on board. And I know the DG has come in together with other partners, the European Investment Bank, the African Development Bank, and they have given us risk sharing guarantee facilities, which we are now extending to these women. On International Women's Day, we rolled out what we call the AFAWA Fund for Women, under the African Development Bank African Guaranteed Fund, and the women can enjoy up to, we get up to 75% risk sharing cover. And this has eased the pain because we are able to take more risk in terms of supporting the businesses either to recover. But I think our intention is not just to help these businesses to survive through the crisis. Our intention is to actually get them to survive, but also to thrive and do well, if possible, even better than they were doing before. So that is one intervention. We have also done some other interventions internally. And I can say that we have recognized the role of women, even in the executive management, in the board itself. We have 4 women. Our vice chairperson in the group company is a woman. I sit on that board together with the 2 other women. In the pension fund that I know, Sandrine, you have met, the trustees, we are 4 out of 7. So actually, we are favored. So we have made very deliberate steps in terms of advancing women, the training, leadership programs. Last year, during the International Women's Day, I rolled out with the support of the board the program we are calling EQUIP, which is specifically dedicated to the women in terms of encouraging them to rise to leadership positions within the group and take advantage of the opportunities that are available. So I can say that, Pedro, there are many touch points. Mm-hmm. I'm not sure we can be able to talk about them in the time that have been allocated, but we have been very, very cognizant of the fact that women can be a very significant driver of the economy, not just the economy, but also they support their families. When we do these interventions, they take their kids to school, they make investments, they provide employment. We have cases where some of these customers have had, very small loans starting from just about probably $100. Some of them, I know them personally because we interact with them. And right now they are coming, they have built such good and scalable and diversified enterprises in different sectors that they are able to come to the bank to borrow up.
I think we, I'm not sure if we lost Mary or not.
We have.
But I'm sure that my colleague will be able to reconnect Mary, and then we'll be able to circle back to her. Whilst we try to reconnect Mary, I wanted to now go to you, Dick, because I was actually going to ask Mary. Mary, she's a chair of the Equity Pension Fund as well. And I know from your experience of managing US pension funds and looking at the strategy on raising capital from institutional investors from an American perspective. How do you think that have things changed? Do you feel that we can tap into US capital at the moment to support GLI investing in the continent?
Well, thank you, Pedro, for that. And, I think to answer that question, it's important to sort of set the context that you need to approach that in. As an investor with a long-term time horizon, like a pension fund, as Jessica hinted at in her comments, you want to be investing in what's next, what's not yesterday or what's today. You need to be looking at what's next. And last time I checked, about half the world is women. So how can you say that you've done your complete due diligence if you haven't included women? Relax, Leeds, relax. If you haven't included women in that process, and then specific to Africa, how can you say you've done your due diligence completely if you've ignored the continent with the most compelling demographics for future growth and economic development? So that's the framework, and then that really gets to what are the challenges from a U.S. point of view, and I think there are a couple. One is misperceptions about Africa specifically. But secondly, and perhaps more important, there's probably a fancier word for it, but I call it inertia. The natural human tendency to stick with what's familiar and what's comfortable and what you know. And in the investment world, that has been people that look like me historically. Some of the headwinds that are created in addition to that, that's sort of just that natural tendency to go with what you know and who you grew up with. We have significant headwinds with developed markets, running as strongly as they have. In the U.S. over the past year, we have pension funds that are reporting 23, 25, 30% annual returns. A 23% return was a bad year, in U.S. pensions. So in the context of the other factor, which is board governance, and the tendency towards conservatism and safety in a public board like a pension fund, you get the pushback. Why should I think about this place and this opportunity that I don't understand when I'm getting 23% without trying? So, shifting the perception to the future to that what's next is what the challenge is and what the opportunity is. It's not something that will change quickly, particularly in the context of board governance. The public pension funds in particular in the U.S., they operate in a fishbowl. They're subject to a lot of criticism and sniping from the sidelines about their decisions and the things that they do, and quite frankly, turnover and political influence. I lived through an extreme example in the time that I was at the Illinois Teachers Fund. We had a 13-person board, and I had, during 9.5 years, 42 or 3 different trustees. So you're always sort of restarting the conversation. It's difficult to get traction. People come in with, very valid points of view and all of that, but you're always, revisiting things that you feel like you've covered. So those are some of the headwinds, but I think we can get beyond that.
And Dick, you mentioned sort of this inertia. How do we fight this? How do we try and change the status quo then?
I think we're creeping towards progress, and that can take a couple different forms. Leeds talked about the collaboration that is happening. Collaboration is going to be key. In the U.S., there are certain states that actually have public policies in place that require their public investments, whether it's pension funds or otherwise, to consider minority and female-owned money managers. And that can be very helpful because it gives a board of trustees who may be hesitant to move in a new direction, sort of the cover to do that. because they have a public policy mandate to do that. Whenever those policies are put into law, there's always a pushback about, oh, it's impinging on our fiduciary duty. But I think you can turn that around and say, I think, a policy like that doesn't cramp your style. It gives you the freedom to expand your style with, the protection of, a public policy mandate.
Very, very interesting, Dick. And I think, I guess I'm going to turn into Leeds here, because I would like to touch upon something that Dick mentioned, which is how do we encourage US institutional investors to put money into Africa, but they are making those 23% returns back home. What is that story? What can you as Standard Bank, what are you trying to do here? How do we fight this inertia, as Dick mentioned?
I'm glad you came to me, because I was dying to put a comment in the chat. Dick mentioned a couple of things that I think I'm going to pose to both him and Mary to help us with. So in terms of, and we've turned ourselves into pretzels, trying to find the sweet spot where we can actually be able to attract the flow of funds here. So we set up, as I said earlier, and I'm grateful to the bank, that allows us to leverage the broader infrastructure to be able to do what we do. I guess it's important to choose an organization that mirrors your values and purpose. So I'm glad that, firstly, I'd like to give credit to my organization. But so one of the reasons we started, firstly, the fund that was set up is not a Standard Bank child. This is a sort of, we are the guardians now, but it's a bigger initiative that was started by UNECA, the UN Women, and a whole lot of their parties. So we've become we've adopted, it's an open adoption. The reason we set up the fund was, as Mary said, and it was articulating the work that's being done, we see a huge focus in the micro space, or SME, and we know that to drive change at a large scale, we need money in the women's hands so that they can make big macro decisions. And that speaks to when they sit in front of that asset manager they've given money to manage, that is Mary, she can now, when you look at ESG, how do we make gender lens investing part of that holistic group? But in a way that the S is not silent when you speak to the impact when it comes to women. And I keep banging the drum on this. So we set up the fund, which is a fund of fund structure, to actually allow for that, because we know it's going, but it's trickling. I don't know if it's a creeping pace that Dick mentioned, but I just want to see the change while we're still here, before the fund managers on the continent are no longer there. Because that's the challenge I find, is not the investment expertise or skill. The reason we set up the fund was to the operational infrastructure that sometimes people fail. And it's not because of it's resources. If you're not a well-established institutional first-tier client, can you imagine in Sandrine's space trying to put more resources in the operational infrastructure for business? And we know with regulation and compliance, the cost of complying with that alone is actually choking the industry. And that's what's a challenge for us. And what we've done was, one of the key things we had, we don't see them, which is why I'm on this panel now. And I think you have to thank my colleague Sil at the bank, who drives the marketing and communications for CIB, for wholesale business, because she said, if you want to do this, people have to be visible. And here I am. So why we went that way was we can't find them. So we've done a lot of research from our bank perspective in terms of the drivers, the key drivers for the attractiveness of the continent, and those that speak to long-term growth. And you can cite technology, you can cite the youth, you can cite everything that we're seeing that is driving the markets on the continent, where you can see growth. But one of the things that we've seen as well is the better performance where you have women fund managers. And we also know that if you have a woman in the boardroom, you have a woman making the decisions, somebody's there to think, to ask those questions. And I work with predominantly men. I don't think they're out there to get us, but I'm just saying that what is the blind spot, the bias. And reason we actually want to make money in women managers is for people who are actively making those decisions and actually asking those questions. Just like you focus on governance, just like you focus on climate, the environment, can we also flesh this out? And I think this is where for us it was, for investors coming from abroad, the challenge is going to be the continent itself. You know, what percentage are we of the global GDP? Now you go to find women. They think it's like finding a needle in the haystack. So we said as a bank, let's go find them. We went across the continent from the north all the way to the south. And we thought our challenge was we were not going to find them. We did. We found them. And these are the women that have gone through a rigorous process within the standard business, multi-manager business, where it's actually helped them. They've passed it. And that's not because this is not the Special Olympics either. It's a DD process that male or female go through. So it's not Special Olympics. And I always want to make sure I put that forward. They passed it. So we found them. And now the challenge is, you said you couldn't find them. Here they are. And now we're saying we're going to make sure that they invest across asset classes. And we thought we'll start across the listed space all the way to private markets so that we can deploy the capital quicker and make it, put it into action. We find challenges. And my question, I guess, you know, in terms of the investment case, it's out there. The research is out there. The women fund managers are performing better. In fact, I look at the countries that are run by men during this COVID, by women in this COVID environment, but that's a topic for another day. We see the better performance in all seriousness. And we actually also think that they will also, it's because they bring a different perspective in terms of how they look at things. So for us, it was, let's bring visibility, let's find them. Let's create a structure where it is, for some, the investments, the size of the ticket might be a challenge. So if we bring them together, we're able to actually challenge that, to make sure that it's actually doable. But not only that, let's create an environment where we support them in terms of the operational infrastructure. And the businesses that is our multi-manager business can provide that across throughout the investment cycle. And we thinking that is something that will actually make it viable. But I guess the question now that in the challenge we find is that it seems to be there's hurdles that we can't manage to achieve, to overcome. And I guess the question is going to be, and I like that Dick mentioned policy, mandates, and I'm thinking in terms of the people that are running those businesses, and Mary mentioned there's quite a few women in their boards across their organization. And I think that's something that also needs to happen. But I guess the question is, what do we do now more? We couldn't find them, we found them. We actually providing operational infrastructure. We're doing the ongoing governance. And we know that these are not people, they've managed money before where they were. I guess the question is, I'm hoping that people in the audience can help us, those that are sitting, in the asset allocation community, the pension fund. And I guess also another question will be the education of trustees and the role that they play. Because I guess if ESG is part of that, how explicit is the gender lens investing in that mandate? And is it something that is actually really, when you look through, when you do your DD, that you actually do look as to how much, is our investment into gender lens or gender smart asset classes? And I guess I feel like we're doing it, and we've turned ourselves into pretzels trying to do it, but I feel like we're not winning. But I agree with Dick. It's a marathon, not a sprint. The fact that actually we're sitting here, we're not allowed to participate before. The fact that we're sitting here is, I can hear you laughing, Sandrine, is actually achievement. And I think we have to take that into cognizance and make sure that we don't get derailed or discouraged or demotivated. But I guess for me, I'll pose it back to the panelists if they have better, other answers, because I think what we're doing is trying to, make it worthwhile and easier for the investors to be able to invest into women.
If I could, Pedro, I'd just like to mention
absolutely
quickly a data point, if I will, that I shared with the group in our prep call. Many of you are familiar with SAVCA, the Southern Africa Venture Capital Association. They just came out with their most recent survey of the industry. And something that struck me, looking through it, is the fact that is cited in their report that both female equity and female management in the VC space in Africa is statistically more significant than the global average. So if somebody is serious about gender lens investing, you get a twofer if you look at African opportunity. Both the the continent and the strong markets within the continent generally, but also statistically, you're going to find that female-led, female-managed, female-impacted investment opportunity.
That is very interesting indeed, and I think it's a good way to bring Sandrine back to the discussion here, because I think as a sort of a fund manager and asset manager, what is your opinion? What do you think? What is your reality, based on everything that we just discussed?
Yeah. No, thank you, Pedro. And indeed, I just feel very grateful, echoing the words of Leeds, to have partners like the Standard Bank and also the 2X Challenge and Mary sitting also on this webinar. We're, amongst the statistics, if you look at the SAGE 0.30 report, women-led fund managers have seen a huge increase of assets under management going to them during the pandemic. But still, about 67% of us are considered first-time teams. We have experienced, and my team has managed 2.5 billion of assets, 14 exits, but it is the first time we're coming together with this strategy for gender lens investing, and we're considered a first-time team. And it's been a 5-year journey to set up the team, even though we're launching a relatively small fund in comparison to what we've done before. So in that 5-year journey, the challenges are real. And Leeds mentioned that in terms of the operational setup, the compliance cost, building a pipeline and building a team and building a track record to prove the investment strategy. Again, if you have a gender lens focus, you are going to invest in sectors that may not have attracted capital before, are in lesser known geographies. So I feel, very, very grateful. We have gone through the 8 months due diligence process of the African Women Impact Fund of Fund that was launched by the Standard Bank that Lindeka is talking about. It is a very rigorous process, a very institutional process. We've learned a lot through that. We were also invited in May to co-create, together with the 2X Challenge of the G7, a 2X Ignite facility, which is meant to really accelerate working capital, warehousing facilities, investment, and bringing more capital to women-led fund managers. And we're really grateful for those collaborations, especially at this time of the pandemic, as you can imagine. And then, the inspiring story of Mary and what she has achieved in 18 years at Equity Bank and what she's going to achieve as a chair of the pension fund at Equity Bank is very inspiring for many reasons, to bring that SDG and gender lens investing to how the pension fund is going to invest, very much in line with Equity Bank's value for women and youth. So aside from, that element of that support and those collaborations are really real, and they're making a difference to us day by day. And why do we need more institutional capital, foreign and African, into gender lens investing? What would be the arguments for that? I mean, we've heard already quite a few during this webinar. Better returns. The IFC report says if you have diverse teams, you will generate at least 20% better returns. We're more successful in tackling bias in the investment decisions. We've heard these times and times again. There's something new with the pandemic. If we look at foreign investors operating in the US and Europe, where clearly our economies are into the no-growth phase with an aging population, yet we're seeing the listed stock market being completely disintermediated from the fundamentals. When we have, as Dick mentioned, stock market generating high returns, when millions have lost their jobs in our communities during the pandemic. That's the elephant in the room. This longer term, this dichotomy between the listed stock markets and the real economy is clearly unsustainable. If we look at the low interest rate yield environment we operate in and the uncertainty around the impact of such level of quantitative easing in the economy, especially given the debt level that already existed pre-COVID-19, it's quite clear that now is the time for foreign and US and European institutional investors to increase their allocation to the alternative investment space. We are a bit more illiquid, that's true, like private credit or private equity and impact investing. But it is really the time right now to seek higher risk-adjusted returns and higher degree of diversification. First of all, by tackling the home bias to invest in lesser known geographies. And when we talk about emerging market, we are not talking about China. We are talking about Rwanda, DRC, South Sudan, and some of the more fragile and emerging economies also in Africa. And also some of the underserved sectors. These underserved sectors are vital for the recovery post-COVID-19 pandemic. These are in the food, health, and education and digital services. We all recognize that these are the sectors of the recovery that will help us recover quicker and limit the collateral damage of COVID into our communities. But these sectors, if we think about it, they're also overwhelmingly represented by women. Women as consumers in terms of nurses, farmers, and teachers. And women as decision makers when we look at who is paying the school fees, the groceries, and the medical bills. So when we know that as a matter of fact, when we have diverse fund managers with women ownership, we are more likely to see investment in these sectors. So there's a lot of merits for GLI strategies and for foreign institutional investors to come into these type of strategies. When we look at African institutional investors, and I would love to hear Mary's thought in that respect as well. Without putting any more money into the economy, we know African economies are much more susceptible to depreciation, whilst the US dollar, despite some of the fundamentals, will maintain itself. So, we've seen the Zambian kwacha go down 20% during the pandemic. So without putting any more money into the system, African governments have an amazing opportunity to actually tell their pension funds to do what they're meant to do, which is allocate 10% to private equity. And that allocation is really strategic because if we look at 80 to 60% of the pension fund assets in Africa, it's hospitals and universities. Now, hospitals and university really have, aside from the moral imperative, the fiduciary duties at the pension fund level to invest in the real economy, invest in the fundamentals, invest in food, health, and education. And I think that trickle effect, without putting any more money in the system, is really an opportunity that we have to seize, and it's really part of the GLI conversation. We've got to look more critically at the sectors and the geographies and looking carefully where are the next opportunity, and love to hear from Mary and Dick on that one.
Sandrine, thank you very much. And I think definitely before jumping on to Mary and Dick, I really wanted to bring Jessica back to the conversation to have that European perspective now, perhaps wearing your DEG hat as vice president. What is the first question is this inertia that Dick referenced? Is that something that you feel perhaps in your organization or perhaps in Europe? Is that something that for you is striking? And secondly, do you think that the conversation changed in Europe in terms of institutional investors' willingness to put more money, to allocate more capital towards GLI in Africa?
Yeah, thank you for that. I think it really goes back to what Dick mentioned earlier, that it's very much about collaboration and more innovative strategies to really, have this forward-looking investment strategy. And what we've seen at DG, but also the other DFIs, is that it's very difficult to be so innovative and to really do things differently when you're alone. So that's why we launched the 2X Challenge initiative initially with just the DFIs and MDBs, but we also realized that there's actually a lot of interest among global pension funds they recognize the business case, and Sandrine has mentioned the numbers, so I won't repeat those, but there is incredible evidence about why it is smart to allocate in funds that are led by women or by diverse teams at least, and that invest also in diverse businesses. And so we have partnered with ILN, with a network of global pension funds with more than $5 trillion assets under management, that are now coming together with us in the new 2X Collaborative industry body. So this is building on the experience of the 2X Challenge, but the 2X Collaborative is much broader. It's bringing the entire spectrum of all the capital providers together under a single roof. So local pension funds, global pension funds, DFIs and MDBs, private equity and venture capital funds, and other types of LPs. We also have, for example, Citigroup as one of the early members. And the idea here is to really use these co-investment strategies and opportunities and to shift capital together. And I think that will also make it much easier for the DFIs, because you can then have one institution that provides the catalytic capital, the others that provide another tranche. For the pension funds that have an interest, but maybe not necessarily the experience of investing in emerging markets, they can come in as co-investors and follow the lead of the more experienced investors. I think this is really the way forward. I think it's also worth highlighting what Sandrine mentioned, this new 2X Ignite initiative, where Sandrine was one of the core members in the design sprint to co-create this. We ran this earlier this year and brought together over 120 GPs, so women-led fund managers, as well as the LPs who are currently unable often to invest in these emerging fund managers because of the challenges that Sandrine has mentioned around track record, size, and some of the other obstacles. And we've created 2X Ignite based on these user insights, but also bringing the decision makers and the big LPs to the table. And the solution is now based on 3 legs. So the first one is this kind of back office support and working capital that Sandrine mentioned. The second one, warehousing capital for early deal making. So the fund managers can demonstrate track record and close deals already before they have first close. And then we link them to an LP pipeline to really help them achieve first close and then also final close. And this is again where Leads initiative comes in. So it's a perfect complement. And I think these type of innovative collaborations are really necessary to promote systemic change.
Thank you very much, Jessica. That is fantastic. And I think then I would like to first pose a question to Mary and Dick before we open to the audience. Mary, one question in regards to, I'm sure the audience know that you chair, of course, the equity pension scheme as well. So from your perspective and from the perspective of the pension scheme, what is your mandate? And do you think that more African institutional capital will be deployed to GLI or not? What is your perspective on that?
Thank you. I believe it's time for that. I really believe time is right for that. As we speak now, Pedro, we are looking at private equity as a possible investment class, which was not a traditional class for us. I think we just went for stocks, bonds, and the traditional asset classes. We have been studying. And I can say that, and probably this is a challenge to Sandrine, that the only challenge is, and I think Lynn's talked about the education part of it, educating the trustees to really understand how does this asset class work, what is the attraction, how can it really support the agenda for gender lens investing. And I believe we are well positioned because I see a lot of partnerships coming through. We are even looking at possibly supporting some of our customers who have done very well with our debt support through the normal borrowing. But you see, the businesses have now reached, and I have a case where one of the ladies has actually built the whole university from 2 classrooms that she started a few years ago. Now it's a fully fledged university. She has expanded that to the hospitality training. and build a hotel for the practical training for the students. And this is something that we really need to look at. And what I can see is also interventions in education. I think Sandrine mentioned that. There could be interventions in agriculture. We are very serious player there. We have seen cases where we've been able to grow very strong partnerships with the local women as outgrowers as a bank because we have the network on the ground. So if we get the private equity partner investing, then we'll be able to create those partnerships where the money is available to the bigger businesses who are working with the outgrowers, and that will make a big difference to the women on the ground. But I think one thing that I would like to stress is that one of the components that we have to always keep in mind as being very important for our women in whatever way we are investing is entrepreneurship training. We have seen that this has done a lot in terms of improving their business and managerial skills. We have seen that improve their debt management skills, the distinction, their record keeping and all that. And those just very basic disciplines of growing a successful business. And I can say that we have had very good cases where we see productivity and default rates go down. The same can happen where we are talking about private equity investments. The private equity funds will also be able to work with the businesses that are led by the women to be able to improve their governance. And I think Liz again talked about this, which is very critical. Look at things like ESG, the involvement of ESG policies and the implementation of that. And I'm talking about this because that has been our experience in equity, because our two previous strategic partners or investors have been private equity funds. We had the Africa Microfinance Fund way back in 2002, and then that was followed by the Helios investment in 2007. And one of the things we learned is that we were able to really do and improve our governance processes because they are coming right into the businesses. They are sending their directors onto the board, so they are involved in the monitoring, are you doing the right thing, asking the right questions. And I think that is what our women-led enterprises require in terms of capacity building. So I think there are a lot of ways of looking at this, but I truly believe that the time is right for us to look at this area, and I think it can be achieved when we have our financials, both in terms of the debt side, and then we have the private equity side, and then of course we have the capacity building votes coming with that. I think it will really work for everybody. Thank you.
Mary, fantastic. Thank you very much for this intervention. And Dick, from your side, now looking at your current position at Rispura, what does the future hold for you, and what will you be focusing on going forward?
I think I could sum it up fairly simply, Pedro. It's bringing a personal face to the collaborations that have been described here. It's necessary, as I've learned myself, there's no substitution for actually being there, being in Africa, experiencing the reality. Not enough people do that. So that's the essence of my work going forward. It's the essence of what my friends at MEDA Advisors do, that others on the panel know very well. It's bringing face to face and putting a live connection to what most folks in the U.S. only see as a newspaper headline. And it's important because, if you want to, we live in a world in the U.S. that's especially dominated by passive investing, and that is driving everybody to be average. And if you want to be better than average, you have to be something different. And, I firmly believe that Africa and investing in female-owned managers is that something different. So, any of us that are, in this business of drawing those connections, it has to be based on personal relationships. And it will take time because personal trust is what builds the willingness to engage and move forward.
Pedro,
Fantastic.
sorry
Thank you very
to
much.
interrupt.
Of course, Liz. Go.
There's just, sorry, I always say we as women, if you wait to be invited, it will not happen. So sorry for interrupting them. My apologies. But just adding to what Dick is saying, and also bringing the action, the background action to the public. We are actually working, we are into conversations to work with Dick Ingram and his team at Rescura. So there's a lot of collaboration that's taking place, and similar conversation we're having with 2X Challenge that I find myself in love with at the moment. But one of the things that I was actually conversation we're having with Jessica and the other chairs of the 2X Challenge was, you know, how do we bring more into the ecosystem? And my conversation in terms of the collaboration that they have, where they bring all the key people in the ecosystem together. And I was just thinking, talking to Mary and what she's doing, and I think there's, how do we get a lot more of that to happen? And I was just thinking that there are asset owners associations. I know of in South Africa, I know in Kenya, focus on infrastructure. How do we bring genderless investing onto the same on their agendas? And I think this is where there's already a platform. We don't need to recreate. There's a conversation that's already been driven by 2X. And I think for me, is a call to action here so that we don't disappear and come back next year would be, how do we take this conversation forward and maybe lean on Mary and lean on other institutions that work with asset owners, take like MEDA, to say, how do we bring gender? And also the education of the trustees is important, because then it actually goes on across the value chain, the asset allocations, and ultimately the asset manager that puts the money that, you know, that invest. And I think for me, I'd like to make sure that there's a call to action. We already have a conversation going with 2X, which we're looking to collaborate, and we're having one with Rescura. And I would like to make sure, how do we bring our own asset managers, asset owners, into the conversation that you're already having in your space, Jessica, and also our own organizations and other pension funds to be part of that. And I think so that we don't disappear. And when we come back here and have a conversation, we can say what we are doing.
Thank you very much, Liz. And I think the call for action is exactly what I was going to mention. I was looking at the various comments and thoughts shared by the audience today, and everyone indeed was asking the same thing, not just in, of course, strengthening governance and improving regulation, but indeed, what is this call to action? What can we all do collectively to carry on pushing this agenda forward? So as we only have 3 minutes left, I would like to invite all of you to perhaps share your own call to action, and what would you like to do in the future in this space? And Jessica, starting with you, what would be your call to action?
Thank you so much. Well, to the broader audience, my call to action is to join us in the 2X Collaborative Industry Body. It's a structured network. So we have, for example, peer groups by type of investor. So we have a peer group for the pension funds. I think this would be an excellent opportunity to collaborate with all of you and do this kind of training for trustees, what was just mentioned, among many other things. And then really looking forward to collaborating on the 2X Ignite facility that Sandrine also pointed out, where we're already collaborating with Educate Global, with Standard Bank, Goldman Sachs, launch with GS, and many others. And I think there's really an opportunity for others to come in as well and to co-invest according to your possibilities and your risk appetite. Thank you.
Fantastic, Jessica. And giving the floor to you again, Mary, what would be your call to action to everyone that is joining and watching us? You are on, can you unmute, Mary?
Yeah, sorry. I would say that time is right for us to think about gender lens investing seriously. We are ready for it. As a pension fund, we have actually looked at it because it really dovetails very well with our strategy as Equity Bank, whereby we say our mission and our vision is really empowerment, especially of women who we believe have very high potential. So we welcome the interventions and the partnerships that will be created in that sector. Thank you.
Thank you very much, Mary. And over to you, Dick. What would be for you the key takeaway, your key action for you as well?
I'm going to frame my response just taking a quick scroll through the comments and if they're representative of the the audience in general, I don't see a lot of American folk here. So that's clearly the challenge that remains for me. So I invite both my fellow panelists and anybody on the call, anybody on the webinar to be open to me reaching out to you to help connect you to the U.S. and vice versa. There's great opportunity here, so I don't want to lose it.
Thank you very much, Dick. And Liz, over to you. What would be one final thought from your side as well, of course?
I firstly is to encourage everybody in the audience to reach out. I believe in the power of the collective. The reason I'm sitting here today and where I am at the bank is actually because of others. And I can talk to our history, but that's not the conversation. And I believe that everybody has a voice, and we amplify our voices if we actually also choose to challenge. And I think everybody that's here possibly has a seat at the table. We have our voices, and I think I would encourage that we find ways to connect. We're already doing it here, but there are people in this audience that possibly we could do more with. And I would actually encourage everyone to reach out, and I'm hoping you, Pedro, those that have heard, you've actually taken their information and data. And I'd actually also, make sure that we have more of these conversations. We have to have more, not less. And that's how we actually make a change as well. So I'm thankful to everybody, and I'll encourage them to connect, and hopefully we can have more.
Thank you, Leeds. And the last word, of course, to you, Sandrine. What would be your own call to action so that we can finish in a high note?
Thank you, Pedro. And obviously, mine is going to be a call to action to investing in youth and women as the drivers of the consumer economy in Africa. It's good for impact. It's also very good for business. And for institutional investors to carefully consider their sector allocation, particularly food, health, education, and digital services, and their geographies to overcome the home bias.
Thank you very much, Sandrine. And of course, again, on behalf of African Business and all our partners, thank you very much to the panelists, and thank you very much for everyone that watched and joined us today. And we hope to see you very soon. Thank you.
Is this the end already?
Indeed.
I know.
You knew this would happen, Leeds. Right?
We'll make sure to find a discussion. Thank you very much, everyone.
Thank you to the audience, and thank you to all of you, my esteemed panelists.
Thank you.
I'm grateful. Thank you.